Hey everyone, this is Anthony, Dead Alchemist. Look, if you're thinking of doing a cash out refinance on the home that you own, you need to know what takes place and what transpires and whether that's a good thing or a bad thing, right? Really, if you have equity in a house and you can tap into your equity to pull out some funds to pay off a lot of your debts that you have, unsecured debts like personal loans as well as credit card debts, right? That alleviates in terms of the monthly payments that you have with them completely, right? So it eliminates it basically. Now, if you're paying about $1,500 a month towards your credit card debts, as well as personal loans and medical bills and vice versa, and you take a loan out for let's say $30,000, $40,000, and you pay about $30,000 with your credit card debts, and let's say you took out 40, you paid $30,000 with the credit card debts, and you have $10,000 left in your pocket. And the current market, the interest rates are so low, your payment is really going to go barely, hardly anything, a couple of $100 more a month for taking out $40,000 on your mortgage, right? $200, $300 to max. But it reduces $1,500 of your outlay on a monthly basis in terms of paying those off. So in most instances, it does make sense if you own a home and you know it's a long-term home for you, and the equity is going to continue to rise, obviously over time. All houses do, regardless of their slumps. It continues to rise, right? Then you could pull out some of the home equity that you have in there, satisfy your outstanding balances and debts, lower your overall monthly payments by $1,500. Now you add another $300 in your mortgage, so now you've saved $1,200 a month, really, right? But you're done. Now you get the tax benefits for it. You got your mortgage payment is slightly higher by $200-$300, but you're relieved $1,500 worth of debts. Now you're good. You're financially stable. Everything is good. Now the biggest hurdle that comes into play is make sure you don't go back into debt, right? Don't use your house as a piggy bank. Every time that you're financially in trouble, you tap into it and to pay off your debts. It doesn't work that way. Ultimately, you hit a brick wall, right? And once you hit a brick wall, you lose the house. Everything is gone and you file bankruptcy. So don't go that route. The best way to do it is do it one time and one time only. Nothing more, nothing less than that, right? And then stop using the cards. You got to come to that realization. You cannot continue using your cards and thinking that you're not gonna, you're gonna pay it off over time. It doesn't happen. If it did, you wouldn't have been in this current situation that you're in right now, right? So you got to change your spending habits. You got to change your savings habit. You got to start thinking about money the way it needs to be thought about, long term, not just immediate term on buying things that you don't need or things that you think you need. In reality, you don't need them, right? So conserve your capital. Don't get into debt. Pay off your home over time. That $1,200, $1,300 that you were paying towards your credit card debts after the savings, apply that monthly payment towards your mortgage, and you pay off your house in less than 12, 14 years. So you can actually become debt-free completely and use that savings to pay towards the mortgage and actually pay off your mortgage in 12 to 14 years instead of having a 30-year mortgage if you do it right. So understand the process, understand what it takes to get it done. You can actually eliminate all debts from your credit cards to car payments to personal loans and your mortgage if you just follow the plan that is proven over and over and over for you guys, right? So if you're truly committed to getting out of debt and you want to end the nightmare that you're in, then look around, make a consultation, let's set up a plan and devise your overall plan. I don't want to just get rid of your debts in terms of credit cards and personal loans. That's one thing. But I want to get rid of your car payments. I want to get rid of your mortgage debt as well, too. I want to retire you in 12 to 15 years. And that's doable if you just follow the plan. You got to follow the plan. There's no way around it. If you want to retire next 12 to 15 years, follow the plan that we lay out for you, execute the plan, and get it done. And you'll thank yourself in the next 12 to 15 years when you're retired and done, right? Once you have no more obligations, financial obligations, you don't have to work the many hours that you do. You don't have to make as much money as you have to that you're doing now because you don't have any expenses. All you have is basic living expenses. So make sure you follow the plan and get out of debt. Thank you guys, everyone. This is Anthony, Debt Alchemist. Take care.